Hi, my name is James Shepard, and in this mini-series, we're talking about cash discounting. And today, I'm talking to you about how to stop end-of-month billing for cash discounting. Now we're kind of getting into the deeper stuff and understanding. So you're like, okay, we talked in the last video about how don't do surcharging, do cash discounting, but how do we actually sell the cash discounting? Well, there's a couple of big things you really need to understand, and this is where we get into choosing the right processor. And by the way, as I mentioned in the last video, if you're like, oh, I want to do cash discounting, but I'm not sure I'm with the right company to do that, go to ccsalespro.com, click on Find Processors, fill out that little form right there. I'll talk to you for 10 minutes, 15 minutes. I'll learn a little bit more about, who you're selling, how you're selling or whatever, and I can make a recommendation of a processor that I trust that is doing cash discounting the right way. So let's talk about this for a second with cash discounting though. This is really interesting. So what a lot of processors are doing that is just the dumbest thing because perception is reality. What they're doing is they're having the reps go out in the field and they're going to the merchant and they're telling the merchant, hey, you're currently paying $300 a month in credit card processing fees on that $10,000 in volume. You should do cash discounting because that's going to cut your rates by 90% or 80%. And so you should only be paying 30 or 40 bucks a month or $50 a month. And so the merchant's like, okay, cool, let's do that, right? Well, there's a couple big problems. So what they're doing is with the cash discounting, the rates are actually, of course, a little higher in most cases, the way most processors are doing it. Either they're matching their rates or they're going higher. And so the problem with that is that they're actually depositing all of the money in the merchant's bank account throughout the month, and then at the end of the month, they're taking the money out. So let me give you an example. Let's say somebody ran a $100 transaction at the business using their credit card, okay? And let's say, for sake of argument here, that there was a 3% cash discount, right, for this particular merchant. So instead of paying $100, the merchant actually collected $103, right? Now, here's the problem, though. What most processors are doing is they're depositing all $103 into the merchant's account. Then at the very end of the month, they're then doing this big deduction and they're showing, oh wow, there's this like $400 fee that's coming out of my account. So the merchant is going, wait a second, I was paying $300 a month, now I'm paying $400 a month. What happened? Now, in reality, they collected more revenue to offset that expense, but you're still putting attention on the expense. Now, some processors will try to get around that by doing a daily discount, a normal, you can do a daily discount of 3%. So that pulls the money out. But at the end of the month, they're still going to get their statement that's going to say your total fees were whatever. True cash discounting is where the processor has the merchant sign a document that allows them to pay the swipe fees on their behalf. Okay? So a true cash discount means I processed $100, right? So I'm a consumer, I'm going to spend $100 with my card, so it becomes $103 because there's a 3% cash discount. True cash discounting means the processor grabs that $3, it never even makes it into the merchant's bank account. They take the $3, they use that $3 to pay the money, and the statement at the end of the month shows total merchant fees $50. And it'll still have some cash discounting information on there, but it just shows total merchant fees of $50 or whatever it was that wasn't covered. Okay? Now, you need to make sure that the processor you're with is doing that end of month thing or doing the throughout the month, and then at the end of the month there's just that little bit, because then that way they're like, oh wow, the rep was telling me the truth. I was paying $300 a month. This month they only paid $50. Awesome. You've got to make sure that the processor is doing it. And again, not just a standard daily discount where it's still going to show merchant fees of $300 and something dollars. It's got to show merchant fees of 50, 60 bucks or whatever. Okay. Now, one other thing I wanted to answer as part of this is, what is that 50 bucks? Like, why are they paying anything? If we're charging them a flat rate of 3% and they're collecting 3% in cash discounting, why are they paying anything? Well, they're pretty much always going to pay something. And there's a couple of reasons behind that, all right? The first reason is there are going to usually be some additional fees, a monthly fee, maybe a subscription fee, a lease of a terminal, some kind of fees. And we'll talk about, how to make money on it later, but there's usually going to be some fees associated that are not covered as part of that 3%. Also, there are going to be some transactions where maybe it was a rewards card or whatever, some corporate rewards or whatever. And the way that cash discounting is set up with some companies, they have it set up so that when that happens, the merchant actually gets billed a little bit more money to go above and beyond that. So it's never very much, but you don't ever want to say, 0% processing or whatever, you really want to say we're going to cut your fees by 80 to 90%. And you can see all that. And when we come out with the new version of InstantQuoteTool.com in January, we're going to have some things like that, so you'll be able to see exactly what it is to the penny. But the idea of cash discounting though is that yes, you have a 3% flat rate, 3% cash discount, so they kind of offset. But then you also have your monthly fees and your terminal fees. Okay, so. Hopefully that video will explain a little bit more about that. Just number one thing is make sure the company doing cash discounting with, they're not debiting the merchant's bank account for the same amount or more than they were before you started, because even though they collected more revenue, which offset that money, the merchant is still going to be ticked, believe me. So hopefully that little tip will help you. Tune in tomorrow to learn more about how to sell cash discounting.